All right, so we did our project on financial examiners, or also called bank examiners. The people that did this project, I'm Matthew, and then Lexi and Omar also did this project. So the first question is, what really is a financial examiner? To answer this question, a financial examiner is really like a babysitter for the institution. They sort of make sure everyone's kind of following the rules or there to day with everything that they're doing, and just making sure everyone's following the standards of what the government sets or things like that. Some of the requirements for this: you need a bachelor's degree, and a lot of the jobs that I looked at also would require coursework in accounting, since the jobs are kind of similar. And then another thing that's not really a requirement, but I noticed a lot within looking at these jobs, is they will have you be trained by a senior examiner for about the first year of your job, just learning the ins and outs of everything, and just following what they're doing and figuring out kind of how everything will work. And then some of the responsibilities for this is pretty important. They will have they make sure that the company or the institution has enough money on hand to deal with any big losses or a sudden change in the market of some sort. So they're kind of there to make sure we have enough liquid assets or cash on hand to make sure that we can make it if something happens within the economy or the company. Another big thing that they do is they keep track of loans that the company gives out. So they really make sure that everyone's getting charged good interest rates. They look out for the borrowers, so they make sure that banks aren't giving out predatory loans, which are loans that have extremely high interest rates or for a really long period of time where people are basically not going to be able to pay it off, or um, they uh, they will just be paying it off for a really absurd amount of time. So the demand. So 80% of financial examiners are employed by financial institutions or state or federal governments, and it's about 40-40 split between the two. Um, so it shows you that the federal government has a lot to do with this job, and yeah. So geographically, this job is very popular where there's large business presences. So New York, like the urban areas of Texas, SoCal, like Tech Valley, Kansas, it's a pretty popular job, in parts of Florida. So in New York, the average salary for this job is actually around $110,000 a year. And then the value for this job, it protects borrowers and lenders. So when they're giving out a loan, kind of like I was talking about earlier, they just make sure that there's no insane insurance rates, and then also that the borrowers aren't kind of getting their way with it. And then they also just make sure all the correct procedures are being followed within the business and going around everything the right way. All right, and then continuing on with demand, we have over 65,000 people employed as financial examiners right now, and that is expected to grow by 20% over the next 10 years. But there's some obvious reasons for that, is 54% of financial examiners are over 40 years old right now. So we're going to see a lot of people starting to retire or move into higher positions within their companies. We're expected to see a big increase in protocols and procedures for this type of work and the work that's being done in financial institutions over the next 10 years. There's going to be a lot more work for this job to do. And then we also look at the turnover rate, which is 74% of examiners are choosing a different profession after 7 years, which is ridiculous. That's 3 out of every 4 of these people are in a different job after 7 years and looking for a different type of work in the finance industry. And then the unemployment rate is also 1.5%, which is 1.5 people out of every 100 are unemployed for the amount that are employed. Um, you're seeing a lot of people leave the industry really fast, and I think that expected 20% is kind of, we're going to see a new 20% of this industry moving in, and there will be some growth, obviously.
Here's supply on Financial Examiner. Expecting to be between 4 to 10 years of preparation according to the SPP range on ONET. This means that it is a preparation level 4 job, and it requires at least a 4-year bachelor's degree and several years of work experience to be considered qualified. Along with this, many will need on-the-job training or vocational training. An example of these requirements or related jobs would be coordination, supervising, managing, and the ability to train others. Examples of the related jobs would include real estate brokers, sales managers, database administrators, graphic designers, conservation scientists, art directors, and cost estimators. Here are the skills that are related to this job, and these are all ranked on ONET and the level of importance. First, we have here critical thinking, using logic and reasoning to identify the strengths and weaknesses of alternative solutions, conclusions, or approaches to problems. Such would be approaching the problem of being able to comply with the law and making sure that the banks are, complying with the necessary laws, and being able to understand and know the laws. Second skill here is complex problem solving, identifying complex problems and reviewing related information to develop and evaluate options and implement solutions, such as risk assessment, being able to make sure that loans are safe for the banks and that they have enough cash to be able to sustain these loans. Being able to go over these loans, making sure that it is a risk or not, and understanding that these loans are also within the realm of the law and not going, making it illegal. Judgment decision making, considering the relative costs and benefits of potential actions to choose the most appropriate one. This also relates to the risk assessment, but also being able to that they are compliant with the borrower and making sure that they are able to protect them. So these decisions and judgment will be made to not only make sure that the loans are not a risk to take, but also with aims to also protect the borrower. Monitoring / assessing performance of yourself, other individuals, or organizations to make improvements or take corrective action. Financial examiners also have the ability to monitor staff and take assessments of the staff, and also make sure that they are complying with the law.
So here are the outcomes and predictions for financial examiner with the pay based on compensation data from job postings dating back to September 2019. Advertised salaries for financial examiners have actually increased by 19%. The median annual wage for the financial examiners was $82,210 in May of 2022. As far as the predictions go, the predictions for financial examiners revolve around adapting to technological advances, managing complex risks, fostering collaboration, prioritizing regulatory compliance, and just consumer protection in a dynamic financial landscape. Some of the outcomes are regulatory compliance, risk assessment, examination reports, enforcement actions, stability and confidence, and policy development. So financial examiners ensure that financial institutions comply with applicable laws and regulations. They're assessing the financial health and risk profile of banks, credit unions, and other financial institutions. Financial examiners prepare detailed reports based on their assessments. So these reports outline findings, identify areas of concern or improvement. When examiners identify violations or risk, they require corrective action. So they may recommend or implement enforcement actions such as fines, penalties, or compliance and mitigate risk. By monitoring and regulating financial institutions, examiners contribute to maintaining stability in the financial system and fostering public confidence in the integrity of banks and other financial entities. And then they may also contribute to the development in financial regulations and policies by providing insights and data on industry trends, risk, and best practices.